let's go ahead. So what we'll be looking today. So what is on for the week ahead? Okay, so in terms of the economic calendar, what's going to happen? We do have some volatility coming in or direction on Thursday, as well as on Wednesday. We have some things for the RBNZ. Second, how will the stronger NFP shape the market? Because we've seen a much stronger NFP. We've seen a huge moves happening on the NFP last Friday. So that just sort of maybe ask yourself on how will the strong NFP shape the market during this week, after these 3 weeks that are to come for until end of the October. As we know, we don't have the FOMC meeting this month, but we do have in November. And remember, there's only 86 days or 83 days, something around these lines, to finish the year. So it's very important to be cautious between this last 3 months of the year. And then in the end, of course, we'll be entering some questions that you may have, as always we do. So if you have any questions, particular question that you should, that you would like me to answer during the webinar, not a problem as well. But I always give a time in the end, last 5 minutes or so, to just go through the questions and, analyze if you have any problems with what I've just said. So I see some new names here. That's pretty good. Let's see. I haven't seen Ryubin here. So welcome, Ryubin. Yonis and Mahmoud. I haven't seen Yonis as well. So good to see you here, mate. Abdullahi Iliwasu. Haven't seen, first time here. So that's very good. Very good. Some people new, three people that I haven't seen here before. Stuart, as usual, here, and Zodwa, as usual, here as well, and everyone else. So that's pretty good. Awesome. Let's go to it now. Let me just, oh no, I think I've made a mistake. Sorry. There you go. Okay. Let's go into economic calendar. There we go. Okay. So as I always say, FinLogix is the go-to you should have when it comes to trading. You have the charting, you have the tools, economic calendar, earnings calendar, market sentiment, as well as financial widgets. You have news, you have some sort of learning as well you can do. So it's pretty good. It's available for everyone from ACY Securities. All right. So what I would like to do is I would love to select all here. All right. And I will do some filter because there is some minor news this week happening. And to be honest, I don't care to those minor news. I pretty much would be looking to get somewhere between medium to high, and preferably high volatility. But if I put on low volatility, there is like a bunch of nonsense that we don't need to know. Reserve, in terms of reserve, Golden Week, that's a national day in China. So Euro group meeting, Australia, DTMI, inflation gauge, and some other stuffs that we don't much necessarily need. Okay, so I'm just gonna unselect the low and just leave what actually makes sense to us. So on Monday, yesterday, it was public holiday here in Australia, was the Labor Day. So we didn't have any videos on the YouTube, plus nothing that I could interact with everyone because I was in holidays as well. Took the day off with family, and we went down to the coast. So pretty decent holidays there. But we haven't lost anything. We haven't missed on anything here. We did have Germany factory orders, United Kingdom Halifax House Price Index, and then another house price index, but Ely, and the retail sales month of the month that came in as expected. Okay, so oopsie from Europe. So nothing on a big miss for Monday. For Tuesday, we do have some important things, such as the Australian RBA meeting minutes that we had this morning, as well as the NAB business confidence, Australian Westpac consumer confidence that came in much higher than expected, much higher than expected, showing that the Australian population is actually, having some sort of confidence on spending money towards retail sales, let's say. China National Development and Reform Commission briefing. And then we had just at now 5 p.m. Germany industrial production came in 2.9% from the expected at 0.8%. So that's pretty good. The industrial projection, as we all know, this is really good for the PMIs, for the manufacturing PMI, because Germany is a big industrial pool. So therefore, if this is coming higher, therefore the PMI, there is a big chance of the manufacturing PMI coming higher as well in the next release, showing to us that the month of August was 2.1% higher than what was expected to be, and 100% more than the previous. Okay. Now we still have the Canada balance of trades, and then exporting, balance of trade from USA. Now tomorrow, Wednesday, the big thing that we will have is the Germany balance of trade for the month of August. But of course, we do have the some speech coming out from the Fed, from Bostic and from Collins. And that should be about it. But the thing gets interesting on Thursday when we see the United States FOMC meetings minutes. So that's going to be really helpful for us. Germany retail sales, okay, month over month, year over year, month over month, year over year, but that's core. Okay, so that's one is two month over month and year over year is core, and then this one is the normal ones. Core and normal ones. Okay, really important as well. But what actually brings my attention to it is the core inflation and the inflation for the USA. So these releases will be really important for this week, especially after a huge uptrend that we're having on the, let me just open here, on the US dollar index. I wasn't gonna show that, but here it is. As we can see, let's go for the 1 hour time frame. Perfect. Okay. As we saw last Friday, we seen a huge move to the US dollar, more than 0.7%, so 0.74% up move in 1 hour. That was actually less than 5 minutes. Yeah, so let's say 1 minute here. Yeah, that was actually in all in 1 minute. So that makes me question, but we're gonna get there. We're gonna get there in a second. All right, coming back to it. So yes, the US dollar is pumping some really big moves to the upside. There is plenty of opportunities to catch the comeback here. Now, this would be a catastrophic event. All right, this would be a catalyst event for the US dollar. 110%. This will make some impact on the market. Now, moving to Friday, we do have the GDP month of August for UK. And someone wants to join us, just give me a second. Cool. And we're going to have the unemployment rate and the PPI for USA, unemployment rate for Canada and PPI for USA. So all in all, pretty much on Thursday and a little bit of tomorrow as well for the German balance of trade will be important. But in overall more Tuesday to Thursday, all right, these last hours of the day, 11:30. Just remembering this is in Australia time, so make sure to change your time here, show you. So see right here, you can change your time. So let's say you live in, I know a lot of people here live in Europe. So let's say London, you can click on London in it. That will be your time zone, okay? So right now it's probably 7 a.m. over there. So just opening up. So make sure to change your time. All right, guys, let me just put Australia Sydney again. Perfect. Okay. Any questions on the economic calendar? Because that's it. Okay. There's no much things happening this week, to be honest. Any questions? Please, if you have a question, send it through. Otherwise, we can move on. All good? Okay, perfect. Let's move on then. So second topic is how the NFP will shape the market ahead. We've seen, okay, let me just put it back here. Let me grab it for everyone. See this. So we've seen the NFP came in much higher than what everyone was expecting, pretty much a double of what everyone was expecting. And that, of course, triggered a lot of, volatility into the market as it is usual CPI does. So we've seen the ISM services came in a little bit high, 54.9% from the expected 51.7. But what was the actual catch of the day was this guy here, the NFP, the unemployment rate, and of course the average hourly earnings. Okay, so this one here. Perfect. Okay, just do it smaller. Perfect. Okay, so for those three, as I always say, Abdullahi have say, hi, we mostly discuss issues on a lot of assets, but not oil. And for now, it has been a good play. Well, that's true. You have a fair point, to be honest with you. I will prepare some speech for Thursday about oil. We can have a look at superficial look today, and I can explain you some of the reasons why oil is going up, and we can have a chat towards that. I haven't prepared anything for oil today, but as you say, that's a fair point. We definitely can go and dive a little bit, not that deep, but we can dive a little bit on oil as well. Thanks for your feedback, though. Really appreciate that. All right, as continuing, the non-farm payroll came in at 254,000 out of 140,000 expected. Okay, and the previous was 159,000. So they were already expecting 9,000, well, pretty much 18,000 less, 19,000 less than what was the previous. But what it came in was pretty much the double. Okay, 90% more than what was the consensus. So it came up to be 254,000. Now, what does that show to us? When we have to stop for a minute and just think about it. Okay, what does these stronger NFP show to us? So the context will change everything here. Okay, so let's continue to go ahead and I will come back to this question later on. Okay, now the unemployment rate came in at 4.1%. This is really good because everyone was expecting to be higher than 4.2%. Most of the economists around the world was expecting even to jump to 4.4%, but what was actually ended up happening was decreasing from 4.2 to 4.1. The expected was same as the consensus, but still still have the same, you know, around 4%. So it's still pretty high in my opinion. Now, the average hourly earnings, okay, let me just oopsie. The average hourly earnings came in at 0.4%. That's pretty good from the 0.3% from the previous of 0.5%. So 0.2% higher than what was expected. Sorry, lower than what was the previous, but it came in to be 0.1% higher than what was the consensus. Still not as the previous. I think if it was higher than the previous, it could be much, much more stronger. Same goes to 4.1. If it comes to 3.9, 4%, it could be much stronger. But this one here definitely was really, really what drove the market, you know, on stronger long positions. Now, the non-farm shows to us that, you know, a number of jobs has been added, excluding the farm work. But when lots of the new jobs are created, it pretty much signals to us that the economy is becoming very strong, okay, which makes the currency stronger. So that means the US dollar. Just let me clear. So we've seen the US dollar being much stronger. Now, if we had a fewer new jobs, then it could mean the economy is slowing, and this would be the opposite effect. All right. Now, the unemployment rate is a percentage of people looking for work who don't have jobs on the USA. So a lower rate means more people are employed, which typically is stronger for a currency. And the unemployment, if the unemployment is higher, as we're having right now, 4.1%, pretty much suggesting to us that it can weaken the currency, as we have the opposite here on the US dollar. Okay, and now the last but not least, average hourly earnings. It reflects the wage growth and shows how you know, how much people are earning. Basically, raising wages mean people have more to spend, which is good for the economy, and it's strength for the US dollar. So slow wage growth can have the opposite effect and will weaken the currency. Now, the context changes everything. Okay, as I was saying before. So even with strong data, the US dollar could weaken if investors expect the future rate cuts. And that's exactly how and why I want to bring the CME Fed Watch Tool. I don't know why I haven't opened this before, but sorry for that. There we go. So as we see, we don't have for October, but we have for November and we have for December, right? So this is for the 7th of November, 2024. And we can see that the stronger data that we had right here, this much stronger data, the US dollar could weaken, all right? It could weak, but it didn't, right? But now is the time that this could weak, because the investors is if the investors expect more future rate cuts, right? Now, I think, if I'm not wrong, this happened in 2019 when the market anticipated the cuts despite the positive job numbers that they had, because the global slowdown was fearing out. During the crisis, we have to maintain this very clear, okay? The US dollar can strengthen because it's a safe haven. Even with weak jobs data, if we had, but we haven't had, we could see this in 2008 when the investors move all their money to the US dollar assets for safety. And like, it doesn't matter how bad the economy is, they will continue to move the money to the US dollar. Okay. Now, with the stronger data, the strong jobs data, it might not strengthen the US dollar if trade wars or the global conflicts pose threats to the US growth. as seen during the US and China trade tension as we had. So what I want to say about it is it's very simple. So if so we have some geopolitical tensions right now as we see, right? If that geopolitical tension continues to grow and that in somehow, okay, I'm not saying that this will happen, but in somehow it actually affects the USA economy, US economy, then the US dollar would be weakening and investors would be moving the money to somewhere else. And that, for instance, could be the CHF, okay? So we can, one thing is, sorry guys, let's just take some water here. Okay, good. So one thing about the US dollar is how this will get shaped for the next 3 months is pretty much with this stronger reading on the job market. As I say, this will be key. Okay, the Fed Watch Tool, of course, not the Fed Watch Tool, but the rates will be key to be monitored. You can monitor this on the Fed Watch Tool. I will send you the link on the chat. There you go. You can, it's public. You can use it. Okay. The next meeting is in 30 days. All right. So let's have a look at the bottom part here. Right. So okay, cool. So for a week ago, everyone was 36.8% of the market was expecting a 25 basis point, 50 basis points cut. Okay. And now 97% of the market is expecting, well, one day ago, 97% of the market was expecting 25, and now 87.4% of the market is expecting a 25 basis point cut. The big thing is that, sorry, yes, that's correct. 12%. Yeah, that's correct. So 12.6% now of the market is expecting no changes. So the big thing here is that majority of the people was expecting another 50 basis points cut from the Fed. Okay, that I think it's a bit of a stretch at the moment. And if you have listened to the podcast I've made with Peter Pan, you could, let's say, get on board of this opportunity much quicker than some other people, because we've talked about how the job market is stronger, even though it doesn't look like it's stronger. Okay, so if we look at here, 25 basis points for the market is now considered stronger because everyone was expecting 50. But if they come in and don't do anything, it's going to be much stronger. Okay, so yes, if they cut 25 basis points, it's going to be weak. But in a sense, this leads up to a stronger US dollar. Okay, because everyone's expecting another 50, even though, if I'm not wrong, Jerome Powell has stated somewhere around the world that he is looking to continue to cut 100 basis points for this year. Okay, so for the month of November, next month, 87.4% of the pool is expecting 25 basis points cut. For the 18th of December, everyone is expecting a pause, because remember, the current target is 475 to 5. So if they cut 25 basis points, they will be going to 4.5 to 475. Okay, and then they're expecting to cut another 25 basis points in December to 425, 4.50. Okay, so that is another 50 basis points cut. All right, from 5% all the way down to 4.5. So with that in hand, we can now work our way up to some opportunities that it may show to me. So let's come to charts. USDCHF. That's what? That's a 5-minute chart. Cool. Let's go for EURUSD, for instance. Okay, perfect. Now, let's just start with EURUSD. I believe EURUSD can go probably somewhat on this area, but there is a probability of we come back lower to here. I'm sorry, to this area. Okay, so if we continue to break through, because as we see, we've just break through this level here. Okay, we can come back, retest this area, and continue to go lower at this point. And even at this area. Okay, so if we break through here, then we have this area to target. Now, do I think this can possibly happen? Look, it's not impossible for the market to just sort of come back lower here and then continue to go higher to this level. And that's what I'm expecting, okay? Because the EURUSD always pull back, okay? Always will pull back. So we have an up move, and now we have a retrace move, and then always correction again, okay? So yes, I'm expecting a continuation of an uptrend on the EURUSD, right? If we put this on the 15-minute chart, right? I don't know why it's missing some data here. Let me just reload it. Oh, well, missing some data, but that's all right. So if we get a Fibonacci, oh no, I forgot to put the Fibonacci. Let's come back here. There we go. Where is my Fibonacci? Here. Why is it not loading? Let's use it here because I remember it was the low point to the highest point. Let me just change some style and this Fibonacci. I don't need this many levels. 61, 50, 38, and I don't need the number 2 as well, and I don't need background. Perfect. Right, so we are looking at the level of 61 for the pullback. All right, so let me get my pen. So we are looking at the 61.8 level of retracement. Now, where this can possibly go, that's the other question. So we take this off and we use the trend-based fib extension to somewhere here to here and then back to here. Okay, so if this is where is the end and now we're coming back up, okay, we may be looking around 23 here at 1.10 300 and the 38 around the, I think it's most likely probable. Okay, let me just take this off to be here. So that's my level of take profit for EURUSD, 1.10 700. Okay, 1.10 700. Yeah. Now, if we go back to the 50 minutes, we can see. Let me come back. Perfect. That lines up perfectly with the boxes that I always mention. So yes, but now, what's the right time to entry? We're missing some data here because it's very important me to show you exactly point. Let's just load. Wow, it's really, really bad. Nothing works today. Okay, let's try it again. Okay, perfect. So if we come to the 15-minute, we've just had the breakthrough. Okay, so we've had the breakthrough this bottom, and now we've had the breakthrough this top. We've had the pullback, and then where is my Fibonacci? There we go. Trend base fib extension. Perfect. So we had here, here. Oops, sorry, wrong one. Here, here, and here. So yeah, first one being hit, and now the last one most probably would be around this box, and then the second one around that box. So with the euro strengthening, okay, we may see a pullback to this area here, and then of course first this one. So we can continue to see euro strengthening. I don't think we can come all the way up here towards that area, but it would be pretty lovely to see euro dollar coming back. So I'm still holding some long positions on it, but of course using risk management. So that's my take for euro dollar. Okay, now gold, I do think it's a good opportunity for gold as well. Let's see if gold is here. Oops, sorry. Perfect. Let's go for the 4-hour. Awesome. I've even shared my positions on FinLogix today. So if you guys don't know, we do have, you can just come back to the main page. You have latest ideas. You can click on latest ideas and you have signals, pretty much signals here. So my one is long Aussie New Zealand, Aussie Kiwi, and the other one is long gold. Okay, so you can have these. I post a lot of trades here every day. Okay, so coming back to gold, we won't be able to, let's say, talk about levels and this and this and that. We have to be much more fundamentalist on gold than actually technical. Okay, so my option would be continue to long gold, even if it pulls back somewhere around this level of 26.20. That's going to be a really good buy in my opinion. Oh, sorry, what's not moving? Oh, there we go. In my opinion. Okay, but we have to always remember we have a box here, and I've been watching this box for a week ago already, and I'm a bit scared that the gold could have this huge pullback down here, just because if most of the money moves to Europe, then gold could lose its strength and have most of the investors pretty much buying, all the assets in terms of and liquidating a bit of profit that they've made on the euro. So that's my only thinking on here. Besides that, I continue to be long on gold. Okay, since 2,700 until 2,700 here. Yeah, here 2,700. Okay. Now, let's have a look on oil. Brent. Perfect. 4 hours. Actually, it's a good take because I went to fuel my car probably a week ago, and I saw the gas price and I was like, interesting. Probably oil's up. And I've went to the other day and check it, and it was more than $10 up. I was like, okay, that's the reason why. So oil is up. Does anyone have a clue why oil is up? I'm going to give it a minute to everyone to think about it, because I've talked about oil so many times. I thought someone would, say war or even some sort of aspect on that, but that's all right. Okay. So there is some options why oil is going up. First one is the fear. All right, fear of oil being non-existent in the next few years. In what way? If the conflicts continue to go and go and go, this will continue to happen. All right. With oil. So my option would be, once the conflict finishes, we may have a pullback on oil. But if the conflicts continue to go, then yes, we will continue to see more higher prices on oil. This happened, last time as well. We can just check it here. Let me just zoom out. Well, I don't think we're going to have sufficient data. Yeah, but anyways, we remember that. Right? I was here last time and we saw this happening. Now, let me just put back in 1 hour. Okay. So remembering that there is a box here. Okay, so there is may option for oil to pull back. I don't think it would happen just because there is a lot of conflict. So most likely we will continue to see oil continue to go up in the next few days and even few weeks. To do a correlation, Abdullahi, I would have to go into here. Yeah. Put in a 4 hours. Okay, perfect. Okay. We do have some sort of correlation. Okay, let me just okay. We do have some sort of correlation, but we still have a big gap between them. So if oil goes down, US dollar would be going up, continuation to go up. Okay. Now, if oil goes up, no, sorry, the opposite. If oil goes down, US dollar goes up. If oil goes up, US dollar goes down. Okay. But it's pretty linked, because if we see here, oil went up and then after went down here and then went up. So this pretty much represents that move here. Okay. So this move here represents this move here on oil. Now, oil went all the way back down and then US dollar just consolidates. So oil is much more sensitive towards the war, as we can see, okay? As different from US dollar as a safe haven, it maintains its value for longer than the oil maintains its value, okay? So my opinion is a continuation on the long on oil, but not for that long, if you know what I mean. Most likely we'll see some sort of pullback in the coming weeks or months. All right, guys, I think this is pretty much all for today. So just coming back here to my, where is my slides? Not a problem, Abdulhali. Hope I helped you. There we go. Perfect. So coming back to here, what we've had looked today. So what's on for the week ahead? So we know that the week will be pretty chill. The only thing will be the CPI and the Germany sort of way, and how do the NFP will shape the market? We all know and I've answered everyone's question. So I think everyone is very clear on that scenario. Hopefully I see everyone back on Thursday, okay? And I do have some news that we may be looking to do 3 webinars a week for next month. All right, looking for entry strategies on the Wednesday. All right. Okay, guys, thank you so much. I see everyone on Thursday. If you have any questions, please contact me on the Telegram. Otherwise, I'll see you in the next video as well. See you guys. Bye-bye.